Crypto is down, and it's down bad. We've never seen the market sour this much, and it's all thanks to the recent crash. Now, you've probably heard this story before if you've been following new currencies. Prices rise and fall literally all the time in the crypto sphere, and it's tempting to think there's nothing to worry about. This time, though, there are some genuine issues. Here's everything you need to know about why this crypto crash is different. To start off, what's the big deal about this crash anyway? The answer might surprise you. We think of crypto as the future of finance, but that might be changing pretty soon. The bubble around these systems is about to burst, and you've probably noticed. The craze around NFTs is dying down. Algorithmic stablecoins are losing value, and major crypto lenders are going broke. Things are not looking good for the market right now. We've even been hearing analysts say the end of crypto is near, but lots of investors have held on. After all, crypto has always had a ton of doubters, and it's not like the market hasn't been in a crisis before. Anyone with skin in the game knows we've been through a bunch of financial emergencies, but the community held together and got through them. Whether you're talking about Mt. Gox going bankrupt in 2014 or the ICOs crashing in 2018, crypto's had its fair share of market scares. That said, it's always come back with even better prices than before. Just take Bitcoin, for example. The currency's been in decline since last November. It's actually lost 70% of its dollar value since then. But get this, even at its current value, Bitcoin is still more valuable than it was at its previous peak in December 2017. That's pretty insane, and it's taught us something pretty important. Crypto is just unstable. This isn't the first time something like this has happened, and it's definitely not going to be the last. Fluctuation is just part of the investment process, right? Well, there's something different about this crash. There's a new macroeconomic model on the way, propelled by the Ukrainian invasion and the recent pandemic. Honestly, it feels like interest rates are going up, and banks are burning money everywhere. High inflation is back after a 30-year coma, and it's brought in a few stricter monetary policies with it. That means the era of excess dollars we've been in since the late 2000s is about to come to an end, and when it does, crypto prices are going to plummet. So far, crypto markets have been enjoying the sweet life, easy money and pretty low inflation. Let's go back to Bitcoin to explain why. The virtual coin went into digital circulation after the 2008 financial crisis. Most early adopters were expecting a ton of inflation due to the low interest rates and the quantitative easing that were in play at the time, but the intense inflation that everyone was expecting never came to be. Instead, crypto's just growing thanks to loads of investors opting in for more yield. And then we entered 2020. Yep, this is where COVID comes in. The pandemic obviously forced governments to shut down businesses and give money to the unemployed. While they were doing that, central banks were busy coming up with some crazy money creation programs. Those programs were some of the most exorbitant schemes in history, and a ton of that cash flow was routed into the crypto market. That's why it began booming while the real economy was dying. Pretty insane, huh? More and more people started getting into digital currencies, but things are changing now. The industry's had some very favorable conditions for growth, which is why it's been able to recover from all those crashes in the past. Now, though, inflation is making the central banks shake up their new tactics. That means they're pulling back on all the wealth they were pouring into financial markets after 2008. And you know what that means. The markets that have had the fastest growth are going to fall pretty hard. What's more, most investors are still pretty dollar-focused. Seeing as Bitcoin and other currencies are falling in value these days, you'd think people would start investing more. They've got an opening, but that's not the case. As it turns out, most people don't really believe crypto will replace the dollar. All these currencies are still measured in dollar worth, and the crypto sphere is pretty closely tied to the traditional financial system. That's why the industry's dollar value rose along with the currencies, and unfortunately, all those invested dollars are up in the air right now. Most investors treat crypto like a get-rich scheme. Invest in a currency when it's cheap and then cash out. Pretty easy, right? Well, the thing about virtual currencies is that their value isn't official. The Federal Reserve System system hasn't guaranteed the dollars that people invest in crypto. That means they aren't obligated to ensure that people who own a ton of these virtual dollars can exchange them for actual ones. So if the crypto bubble pops for good, you can kiss all those online dollar bills goodbye. Right now, the only dollars you'll find in the crypto sphere are those paid by new members when they make their first purchases. The rest are all present in the form of stablecoins, which have two types. One category of these coins is backed by dollars, and the other isn't. And all us crypto nerds know that dollar-backed stablecoins are rare. That's why people are pretty nervous about the state of crypto. They're pretty much scrambling to replace their crypto for the new real dollars left in the market. And these things usually go something like this. The big players will cash out while the average person misses out. So you've got a small number of dollars to address major crypto exchanges, and that's obviously a problem. To compensate, crypto values will fall until there are enough dollars for everyone to cash out, and that is how this new crash is different. And seeing as the Federal Reserve is going ahead with its monetary tightening, investors have no insurance. Suppose crypto isn't able to produce enough value in dollars. In that case, it'll be almost impossible for e-currencies to rise as they have in the past. Instead, they're going to have to go back to their original valuations, where a currency is valued in terms of itself. You might remember that Bitcoin was originally just equal to 1 Bitcoin. That's what we're going back to. And because of that, different companies are imploding. They're actually going to extreme measures to reduce their losses. Coinbase just reduced its staff by almost a fifth. At the same time, other major exchanges like Celsius and Binance are either halting withdrawals or stopping them completely. They don't want to lose out. It's pretty sad to think about all the people who invested millions into the market. 2021 was the year of cryptomania, but we've followed it up with a pretty sad twist. We can still hope for a revival, but it's looking less and less likely every day. Crypto might be down for the count. Now in other news, let's have a look at some other developments. First of all, Bank of America's crypto users just shrunk by 50%. We all know crypto's been pretty versatile lately, and it's hurting the banks. Tons of people who ventured into the space with Bank of America over the past few years are pulling out, and knowing how bad the market is at the moment, we can't blame them. Between April and June of this year, the bank saw the number of people who have no interest in investing in digital currencies grow. Now 30% of their customers are against crypto investment. That's pretty big, because that percentage was 21% before April. What's more, the bank's crypto users shrank to below 500,000 in May. They were 1 million strong back in November of last year. People just aren't viewing the space as a reliable investment anymore. It's just another sign that we're in the middle of a major slump in the market. Doesn't look like we're getting out of it either. Next, Bitfury CEO Brian Brooks says crypto isn't replacing the US dollar. Brooks, CEO of Bitcoin mining and crypto tech company Bitfury Group, has commented on the recent crash. He thinks the biggest misunderstanding that investors have is this belief that crypto is here to replace the US dollar. According to him, that's not actually the case. Instead, he thinks crypto is a great substitute for centralized banking systems, with networks that give users more options than the traditional financial system. He went on to say that stablecoins will soon become an alternative to bank deposits. They'll basically be free bank deposits, which will really benefit low-income groups. The CEO says crypto isn't going to replace the US dollar, but offers an alternative to it. We'll just have to wait and see if he's right. And finally, Coinbase is seeking licenses in Europe. Here's some good news for a change. Coinbase, the US crypto giant we mentioned earlier, is looking for international markets to drive growth. Finally, some more investment. After garnering a pretty active presence in the UK, Ireland, and Germany, Coinbase is seeking licenses with other European countries. It's actually got some aggressive expansion plans for the region, including countries like Spain, Italy, and France. According to their VP of International, this plan is their defense against the crypto winter of 2022. They've already hired their first employee in Switzerland to get the ball rolling. Let's see if this strategy works. That's a wrap for this video. What's your take on the latest crypto crash? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.